Okay, here we are. Welcome all, really. My pleasure to be here with you again. How are you? How are you all today? Hope the market is treating you okay. Really? The idea today is to talk a bit about different indicators setting short-term ones. We have reviewed a few of them in the past. We have talked about this in past Asian sessions, right? So for the ones that have been there in the Asian webinar, will be a good review of what we have been talking about, right? Anyway, the idea is today to talk a bit about how our trading strategies should work, right? I know that you have heard several times coming from different experts in here that we have to choose one trading strategy, maybe two, to work with the market, right? And follow that trading strategy. In fact, I do agree with that idea, with the only difference that instead of having a one or two particular trading strategy, I have a couple more hidden in my sleeve, right? For different market conditions. I do believe that, really believe that, whatever pair we are going to trade, we have to understand that the market conditions change during day, even intraday, but in general, what I'm trying to say is that behavior is cyclical, right? We have times of higher volatility. We are now approaching to summer, and we are heading to a quiet market with low volume and high, strong market movements. So we have to respect those cycles, and we do have to understand the behavior of the market. So there are different opportunities market trade give us, and we can seize them all. The fact is that we choose the right tool for the right moment. Anyway, and as I always told you, keep in mind that it's not just an indicator, it's not just the tool, it's what we have studied about that indicator and that tool in the past. Okay, what is giving us the chance of success. The fact is that I always come to the same, I know, but I'm a firm believer in backtesting, right? If we know what happened in a pair with a certain time frame, in a certain pair, with a certain indicator, the last 600 candles, okay, we can make a good statistical base to forecast what could happen in the future. Nothing is 100% reliable. We know that. Nothing is 100% perfect. We also knew that. Okay, but as much more info we get from past, okay, much more chances of success we have in the future. It's really important to understand that when we have strong volumes like we are having this past 2 weeks, okay, maybe our daily strategies, or at least mine, okay, need at least they need a longer stop loss and a longer profit taking. That's the least they need to adjust to market conditions. Okay, so if I have to make my stop losses wider, then I will have to reduce the number of lots I'm trading per trade. Okay, but I will also enlarge my take profit. Okay, in this particular days, for example. Another alternative I do have is using alternative trading strategies. Okay, these ones I have studied them. I don't know, maybe 6-7 years ago when I just started, and I keep on bringing them back to my desk. Okay, because they are useful, they are still reliable, and the percentage of accomplishment of good signal hardly change across the years, right? I keep on backtesting my old systems day after day after day. Anyway, keep in mind that indicators such as that, okay, indicators, they are not going to tell us anything. In fact, they tend to lag, and we know that, okay? Technical indicators rather follow a trend than predict trend change or reversal, or be there to give us the exact top or the exact bottom of the movement, right? So, when we analyze markets, okay, indicators is there after price action, and the idea is to try to forecast future price action. So, how do we use these indicators to do that? Okay, I will come with a couple of different strategies, apply for different pairs. Sorry, I will check if you have any questions or comments. Okay, no questions, no comments. So we are going to review first this very short-term strategy. I like it most in pounds. Pound is more uh, reliable trade, technical currency I could find across the board, despite not my favorite one, right? But that's just a personal question. But it's the most technical one. Always pound has been very good behaving technically, and that's why I will present this particular strategy with pound. It also works pretty fine, okay, with Australian dollar versus the euro or Swiss franc against the euro. Not so good with euro, but it works. It depends on the market circumstances. And it's not working at all with Japanese yen profit. Okay, this is not a strategy you can apply for dollar yen or any other Japanese yen profit. As I always remind you, this is a UK MetaTrader. Okay, so my time frame is London time, right? So it could not work in the same in another kind of MetaTrader. So test that before applying anything that we are going to discuss today. Anyway, this is a short-term trading strategy, okay, intraday one, that takes advantage of two market conditions, okay. We have to check the maximums and minimums of the last four sessions, right? In this case, sessions means hours, just without taking into account current one, right? I will mark it right now, okay. If I discard that candle, okay, my high of the last four sessions, and we have a great trading war yesterday when we do this example, a great trading signal with highly profits, okay, and don't expect it to happen today again, but seems so. Okay, I will count 1, 2, 3, 4 candles. This is the fourth, excluding current one. Okay, so I will set my stop and resistance levels, my trigger levels. Okay, in those maximums and minimums of the last session. If the pair during this candle manage to stay inside this one, okay, I will probably have to adjust them because this one will be closed then. Okay, so this one won't count anymore, right? And I will have to see if this one sets on the low or whatever. Probably not. I will have to adjust it, okay? Anyway, the idea is to make the buying trade, okay, once the pair breaks above the 43.60 in this particular case, right? Or sell the pair under 43.05, right? We have one filter to this, and that's the moving average you are seeing right now in red in the middle, okay? This moving average, as you can see, is a 10 periods one, simple, yes, but applied to typical price. It's not applied to open, it's not applied to close, it's just the typical price one, right? So that will be my filter, either to buy or to sell, okay? If I'm going to buy, I will do it above this level, okay? If the pair reach 43.61, I will be buying the pair. But how the moving average acts as a filter? Okay, price should be, when it reaches 61, okay, at least 8 pips away of this moving average. In this particular case, it will be 43 pips away there, quite a lot. So I do have a good trading buying signal in that particular case. On the contrary, if the price is about to break the low, right, around this 43.05 level, okay, I will also check prices. In this particular case, it's just 10 pips away, but it's enough, okay, it's enough. It's 10 pips away of my breaking point, so I could sell every time or buy, okay, with the condition that the price should be at least 8 pips away of that moving average, right? It's quite easy to get into the market. Now, let's see how we set the stop and limit, okay? Let me check if you have, okay, no questions, no comments. How do I set my stop loss in the short-term trading strategy, intraday one? Okay, the idea is to set your stop. I usually set 17 pips plus spread, okay? It will vary, but an average will be 20 pips, right? If we have 3 pips spread in pounds, maybe around 20 pips of an entry point will be enough. Meaning, if I have a buying position, I will be buying around 43.61, 62, okay? Above this level, in fact, a bit more because of spread, right? This is the ask price, not the bid one. But anyway, let's say we buy around 43.62. So my stop loss will probably be placed around 43.42, 20 pips away of that price. The same goes to the downside. My stop is an average of 20 pips. How do I take profit? Okay. The fact is that when we have high volumes in the market, the breaks of this fast 4-hour candle high low would probably trigger an interesting continuation run, right? So I will recommend you, okay, if you are not following the trade, if you get into the market, right, and leave the trade there, put a 45, 15 pips, 50, pips, take profit. That's not much. But if you're watching the pair and following it, I would recommend you to move your stop loss at least to break even when you got 20 pips inside the pair. Really, it's hard to see it making pullbacks, but 20 pips of gains will probably came fast, right? If the break takes place, and we could move our stop to break even then, and keep on following the movements and keep moving stuff. I do believe that it's better to make a few profit than make none or even lose. So it's a good strategy. We can move our stop. Anyway, remember that any kind of signal you saw in the markets, right, should be accomplished in, I don't know, not much more than four candles, right? So after 4 candles, if the pair has or have no other signs of continuation, it's a good idea to take profits and stop moving the stop loss. Okay. I don't know. Do you have any questions or comments right now? No questions, no comments. If you don't, I will come with another trading strategy. So take your time, think it. It's pretty simple, pretty clear, nothing complicated. Okay. It does not need anything else but the height of the lows of the box candles and the moving averages. So as simple as that, right? And it works pretty fine for pounds. Watch it. Okay, no questions, no comments? Okay. One more time there at the beginning would be stop loss. Claudius, where would you place your stop loss? That's what you're asking, I believe. By 20 pips, okay, away from your entry. In fact, my theory says 17 pips plus spread, okay? Take into account spread. We know that we have different platforms. Some offer amazing 2 pips spread, and others not so amazing 5, 6 pips spread in pound dollar, but have an average of at least 20, 22 pips. Will depend on your spread in the currency, okay? Keep in mind that and the spread 17 pips plus spread, that will be my stop loss. If I buy around 43.61, then 43.41 will be my stop loss. If I sell under this level, then 20 pips above will be 43.20, 22 or so. Okay, an average of 20 pips stop loss. The idea is to try to find trading strategies, okay, that nothing guarantees, okay, a continuation, but at least that offer us short stops and good break points to extend the rally, or good entry points that show us that market price, or we are going to accomplish more pips than the ones we reach. I usually prefer those ones overall, you know. More examples, please. Another example? I'm not sure to understand this struggling, but Joker. Okay, we are going to take another example. Give me a second, I will refresh the chart. Okay. And Joker, what do you mean about my 4 hours break cut only at special times? No, it's just an alternative. Okay. I believe that I don't know how many trading systems have you seen in this webinar along the time you have been here. There are a lot of experts, a lot of different trading strategies. They are all valid, right? Uh, and we probably get stuck to 2 or 3, as I told you at the beginning, right? But do you like me to talk again about the same trading strategy I use daily? I said no. Let's go for something different that anywhere works. So that's the general idea, okay? Today to present you something different. I have been doing webinars. I don't know, mm, 4 or 5 years, 5 years is the least, okay? So the idea is not to repeat myself too much. Anyway, this is the euro dollar chart, okay? This is I will add the simple moving average, okay? And let's do as an example, and let me enlarge it a bit, okay? Okay, I believe that euro has a lot of room to correct to the upside. That's a personal perspective. We are going to see it right now with another trading strategy. Okay, let's set the high of the last 4 candles, right? Discarding current one. This does not count. 1, 2, 3, 4. Okay, this is the fourth one, and this is the low in the second one to the back. Okay, okay, there it is. Okay, I will erase this. Okay, so the moving average is in the middle of both the support and resistance area, right? So this is telling me that if this candle starts to accelerate above this 2270 area, okay, pair will likely extend the upside. I only will take a look at where the moving average is. If the moving average is pretty close to the 2270, it was the case past Asian session, right? It was closed. I will have to wait for the pair to move at least 8 pips away of the moving average to get a buying position. Again, my stop loss will be just 20 pips more in euro than it's lower spread usually in most of the platforms. Okay. I will set my profit for that particular trade in around 30-35 pips. I tend to reduce my targets in euro compared to pound. Okay, so I will buy around 22.71, 72. Okay, place my stop at 51.52. Okay, and take my profits around 43, 43.10, not much more. Okay, that's the other example. That's a probable trade we have in here. Anyway, it's a go patient trading strategy. But when we have high volume, okay, and we have the breaks or opening sessions, or session opening is a great trading strategy. Okay, we will be playing with the highs and the lows of previous sessions, so that will probably trigger more interesting movements usually. Okay, don't trade this when last New York hours, early Asia with Sydney opening because it's not worth it at that particular time of day. It works better after Nikkei opening usually, early European session and till mid American afternoon. Not much more than that way. It's not working better in the mid of half American afternoon. The beginning of Nikkei, okay, of Japan. In the midterm, it's not so uninteresting trading strategy, but whatever. It's more interesting at this point. See how the pair retreats from that high, okay, at this point. So we have no signals at the particular moment. I wish sometimes we had one. Anyway, we have some in another trading strategy. Okay, we have more questions. No FX trade. We don't count current candle, okay? Okay, we don't count current candle. We count the last 4 excluding current one, okay? That's the general idea. Exclude the actual one. That's the one that's supposed to break even higher or lower or past high and low. So that's why we don't count it. And Ava says, why we choose this for candles and what's the moving average benefit? Well, the 4 hours, why I choose 4 candles? Because of statistical back testing. Okay, I just thought the last four is a good range to come to take a look at the break of that past 4 hours range would probably trigger an interesting movement. And the moving average is there as a filter. Okay, that's the use of moving average. If we are not 8 pips away, I will have to wait for a better entry point or for the price to be at least that far away to get into the market. That the moving average is acting as a filter. That's the behavior there. I don't take pictures of past Asian session trade in pound. I should have. I can't remember exactly where the price was at that particular moment. Okay, but I do believe that it was this one when we start the Asian session. Let's give it a try. Okay, I believe that was around here. Okay, yeah, it was probably around here. 1, 2, 3, 4 candles, right? This is a good example why waiting will be interesting. 1, 2, 3, 4. In this particular case, the moving average was exactly, I don't know if it's, okay. Okay, give me a second, I will refresh. Okay, yes, this was the candle, this one, okay? That is what's giving us the selling signal past Asian session, right? And as you can see, the moving average was barely 1 pip away from the low of the previous candle around 44.20, okay? 44.20 was the low of that candle, so that was my support area, okay? And the moving average was 1 or 2 pips above it, not much more than that. So when we were trading this one, we said, okay, if with the moving average is around 20, as well as the support, I need to wait for the pair to be at least 8 pips away from that 20 area, okay, the moving average, not the base, to sell. And in fact, see what happened there. Break the 44.12 level, and from that on, it was only to the downside, right? It was very interesting, quick move in a couple of hours, just 4 candles, okay, and they give me my maximum benefit, 1, 2, 3, 4 candles, right? After that, signals start to be low. Despite the pair continue, okay, it's stable now, it's been in the 4 hours, in the hourly chart, sorry, it's valid for more or less 4 candles, not much more than that. In the 4th candle, we happen to have the maximum profit. But, well, that's not the idea, okay? It's not always easy to take where the maximum profit is. But what I'm trying to make a point here is that after 4 candles, you should get out of the market, okay? Well, probably, unless you see, I don't know, strong slam, continuation, and you are there to trade it. However, we sell around 44.12, and in a couple of hours, it gave us a good 17 pips, okay? 17 pips, sorry. So that's why the average take profit of this trade will be 50. Okay, that will be fast and mostly clean. And see what happened after the pair entered or hit our selling level 12 in this candle. We have a very small pullback above it, but from there on, the movement was all selling, right? That's why the moving average is there. Okay, 8 pips away from the moving average. If the moving average is close to the supportive resistance, like in this particular case, then you will have to wait for the price to break even a bit lower. Okay? That's the idea here. Anyway, no, I didn't, Claudius, no, I didn't wait for new candle opening, okay? I just wait for the price to be away enough of the moving average or under or above the support or resistance area, okay? Okay, any more questions or comments? Okay, no more questions, no more comments. Then give me a second. I will refresh the chart, okay, and give you another short-term trading strategy that we also do in the past future session. But it's working great for friends here sometimes. Okay. No, not sometimes, always. Ash, I never tested this on 5-minute charts, you know. I'm not a big fan of 5-minute charts, but If you do, let me know. Okay. I don't like trading the smaller time frames, 30 minutes, for the fact that under 30 minutes, I believe that we get a strong distortion, okay, and we will be more close to scalping. And I'm not a big fan of scalping at this time of my life. I'm getting closer to long-term trade than to scalping itself, okay. As I told you, we have to keep in mind that any signal we see in market will be valid just for the most 4 candles. So if you're trading 5 minutes charts, that will give you a 15 minutes time frame to close your trade. And in 15 minutes, I know the euro could move on. Maybe in a crazy day, 30, 50 pips in a 15 minute candle. But usually in 15 minutes, the pair will give you not much more than 10, 12 pips. So that's what I don't believe it's worth to trade in that time frame. It does not work for me, but it of course could work for you. No doubt about that. Anyway, this is a different trading strategy. Sorry, it's not giving us a lot of signals. But usually when it does, it turns quite interesting for our friend the euro, okay? This is a modified commodity channel index, okay, with levels at 200, and less 300, right? And I have added two moving averages, okay? One is that they are just as a price follower, okay? This red crimson one is a 3-period one. Okay, and it's there for the visual effect of seeing one moving average cutting the other, right? In fact, what is actually crossing the other moving average, the 25 periods one, is just price, okay? So it's nothing more than visual, the red one. Okay, comes off, really? I would see it working. Can you see it? Is the cam working fine? Fine, sorry. Come on. Okay, now. Okay, sorry. Sorry, guys, for that. Sorry. Let me check. Is everything okay? Okay, sorry for that. Just a technical issue. Okay, back. Anyway, yes, it's a 15-period commodity channel index. That's why I told you it's not giving us a lot of signals. But when it does, they are pretty interesting and almost a trend setter, okay? We have a usually quite interesting trend coming after the signals that took place. Anyway, sorry, as I told you, 50 periods commodity channel index, 0, 200 and less 200 levels, and 2 moving average. This crimson one, 3 periods one, we are going to talk about the settings right now, is there to make the effect of cutting the pink one of 25 periods just more visual, okay? It's more visual to see the cross of the moving average than in fact noticing the price is doing the same, okay? Like in this particular candle, we are seeing the price, the moving average crossing the 25 one to the upside. But anyway, the settings of the moving average, okay, will go slow and easy. 3 periods, the simple one applied to close. Okay, is the red, the crimson one. Okay, the price follower one. Okay, the other one, the 25 periods one, is also a simple one applied to close. Okay, why have I choose this moving averages? Well, as I said here before, I have tested all the possible combinations you can imagine, and the ones that you can't imagine, I tested them also, okay? And I found out to be more accurate for this type of signals taken in error, okay? What's important here is combining both things, the growth of the moving average and the price, and the growth of the commodity channel index of their midline, okay? In this particular case, we are seeing the growth taking place in between price and the 25, okay, anticipating maybe an upside continuation, but the commodity channel index is not giving me the cut at the same time, so I won't trust in the moving average, just not just trust in the moving average. I want to trust them both. Okay, I need both conditions to take place at the same time. Like in here, for example, okay, I will put a mark. We are going to check them all. Y cross is a good one and Y cross is not good one. Okay, around here. Okay, we have both. Okay, those are good ones. Okay, why are good ones? Because the commodity channel index is coming from near or above the 200 level. Okay, when commodity channel index does this kind of stuff, that moves very close to the zero area. Okay, and it's not coming from way before it, way far away from it. Okay, that's not a good signal. Okay, in fact, this one is also a good one. Okay, the commodity channel index is coming from far away. But when it starts to play silly around the zero line, it's not so good. Okay, more interesting signals came from far away. Anyway, the idea is that we have both. Okay, the cat of the CZI in the zero line and the cross in the moving average. If you are a bit more, I will enlarge this a bit. Okay, to see it from closer look. Can you see it? Hope you can. Okay, to take a look at this particular question, the strategy, you will find out, okay, that you can wait a 30-minute candle to open your trade. Okay, the first candle, okay, won't move too much away. It will give you still a second one, an entry point in this particular case, selling position around 23.76. Okay, and as long as the moving average keep widening and commodity channel index continues following, I would probably let my trade open. Okay, I would probably keep it open until the commodity channel index makes one of these V shapes outside the 200 level. Okay, that is the signal of the bottom. Okay, a probable bottom taking place. Sometimes it does, sometimes it's continuous. That will be the maximum way to profit from this strategy. Follow it, and as long as the moving average are wide, taking more distance in between each other, okay, I will keep my trade open until I see this particular reversal. Okay, if this moving average starts 3-1, okay, do something like this. Okay, losing the bearish slope and in a couple of candles turn flat or start heading higher, like in this case. Okay, that's another signal to close your trade. Okay, that's a good moment to profit from the strategy if you follow it. Okay, if you want to follow it. Anyway, as long as you get into the market, once you get your first 20 pips, I believe that break even is the place to put your stop loss. However, when we get into the market, I will try to set my stop loss in the contrary side of the moving average, meaning if I'm selling, I will place it above the moving average. Okay, maybe above the last candle high. So in this particular case, previous candle before the break of the moving average was at around 44.04. So I would probably place my stop loss above that level, around 24.10. Okay, that's where I will place my stop loss. Okay, if I have a buying signal, like in this particular case, right, we are going to see not good signals right now and how to work with them. Okay, but if I'm going to buy in here because they have a cross and they have a candle opening above it, then in fact this is the one that gives the signal. The dodgy one here is one I will entry. I will probably place myself in the contrary side of the 25, okay, around here, under this low of 21.78. Okay, that will be a major tight stop loss. Okay, and I will probably take profits once this candle starts moving. Okay, when the moving average lost its bullish potential and turns flat. I don't care if the pair then continues to the upside. Really, I don't. Okay, because I profit enough. Okay, and there's always a chance to see the movement reverting, like in this case. Okay, in this particular case, you can see that we have a cut in here. Okay, of the moving average in between themselves. The commodity channel index didn't support the trade. The same happened here to the upside. We have a buying signal coming from moving average, but not supported by the commodity channel index. So no good idea to take the trade, okay? And in fact, it gave very few pips. In this one, we have a selling trade, okay? But what happened here, right? We have only 15 pips, only 50 pips, right? Before market reverted. That's why when commodity channel index starts growing a bit, okay, that's why my commodity channel index is applied to the open of a candle, not to the close. Because as soon as next candle opens, okay, without confirming the downside continuation, right, the commodity channel index will draw this small B. Okay, that's warning me. That's warning me that there is not enough chances to see the pair or the rally extending to the downside. So when that takes place, I would rather move away and close my trade with 30, 20 pips profit than wait till I get stopped out. Okay. And in fact, if you take a look at what happened in here, right, if we set or stop above, a few pips above this high, around 23.80, okay, pair has tested 1, 2, 3, 4 times this low and was able to break it before it finally stopped up in here. Okay, so I won't give it the chance to reach the stop loss. If I'm here, I will profit from the trade. We have 2 bids, not just one. Okay, so after this kind of signal, okay, this next one, okay, I would probably get big north, okay, because we have good upside cut, okay. At that particular moment, the indicator was too close to the zero line to confirm me that it was going to be a bullish trade, okay. So maybe it's not a strategy to use that will give us, 3 or 4 trades in a day, but it would probably give you one good one per day. And the average pips you can take easily from this kind of trade is around 80 pips. Okay, that's way a lot for a 30-minute signal. Okay, and the stop loss is not much more than 30 pips. That's why I like this particular strategy. Anyway, this setting is special and particular for euro. We are going to discuss another one for pound. Okay, I found out it's more reliable for pound, but let's see if we have, okay, questions or comments. I take the cam off for a second, okay? Nick, 30 minutes, okay? This is a 30 minutes. I have tested in this 30-minute chart, so I recommend it for 30 minutes, okay? Indicators get flat, it's not worth it. Okay, and see what's going on right now. Okay, the commodity channel index is bending back to the downside despite the cross. Okay, and that's not giving me yet a good buying signal. However, it's coming from less 200. So if we have a strong upside acceleration in the next couple of candles, commodity channel index could turn back to the upside and cut across this zero line pretty fast, and then yes, give me that. I would really need to see the pair rising strongly right now, and I don't believe euro has too much aim to rise at this particular point. Okay, I don't really see it aiming for to the upside. Maybe in a corrective movement. Okay, I was waiting this one, man. It has a lot of room to correct, as I told you, but it has no aims to do it. Okay, I was following the correction in Swissy. Okay, way more interesting than here, right? We'll have divergences in the daily chart, but since nobody wants to buy poor euro. Anyway, that's the one for or euro. We are going to discuss quickly the similar strategy, but yeah, that usually gives a lot of more signals. It has a smaller target, of course, for pound, and it usually gives a lot of intraday trading signals. Way different, okay? It's similar but different for what we talk about euro. The dog, Ash, sorry, okay? Yes, Boyki, it's poor my dog. She's way too old right now. I'm pity her at this point, but one day I will kill her because she only barks when I'm doing a session. It's holiday in here, 200 years of revolution that starts with Argentinian freedom, and that's why things are a bit more quiet and I'm at home and everything's a bit more relaxed and familiar today in here. Anyway, the last one and quick review we have because we have 5-10 minutes, not much more, before Kibiki wants to throw me out of the room. Okay, pound 30 minutes, more or less similar strategy, more or less meaning we have a lot of intraday signals, and the profits should be smaller than with euro. Euro gives a good one after these cross here. Runs are good, but not so strong or so good like in euro one. Okay, commodity channel index is the classic 14 periods one. Again, with 200 and less 200. I don't like 100 levels for pounds. Never did. Okay, and the moving average are exactly different, okay, to the euro one. But meaning we have a 3 periods one, crimson this time. It's just doing the same as the one with euro. This liner weighted, applied to close. That is there to make the system just a bit more visual, and what it really matters is price action, okay? Seeing the price taking advantage of crossing the other one. Okay, in this case, this linear weighted, applied to close. And the other one, instead of 25, is a 15 periods one, again linear weighted, and again applied. And this one applied, to typical price, to average. Typical price is pivot points. I do like pivot points, not classic ones. But yes, to apply moving average. Anyway, the working methodology is quite similar to the one we saw in euro, okay? Sorry, I don't know what happened there. Stops weekly. I was looking for this. Okay. No. Okay, there. Cats. Let's go for cats. In the commodity channel index, right? That's what we should care about. Cats in the commodity channel index. Nothing much more than that. Okay. There. Okay, those are the last ones. We are going to take a look at also at this one and this one. Okay, those last ones. As you can see, we need to wait for a candle opening. Okay, to confirm finally that the CI cuts the zero line. We can see that while the candle is developing, like it's doing right now, we can see that the commodity channel index could extend and then under the zero line, okay, so the candle starts to fall. But if before the candle close the price recovers, then commodity channel index will also recover. So we should wait for candle opening, okay, and with price under the 15 period one and commodity channel index crossing the zero, okay, to confirm the trade. Yeah, the working exercise is quite similar to the euro one. I will place my stop under the low of the previous candle, okay? And in this particular case, and regarding pound, an average profit target will be in between 50 and 70 bips, okay, for this particular trade. Of course, if we are trading against the trade, I would tend to reduce that when we have a strong trend developing. Okay, in this case, we have 43 positive pips, right? If we're going with the trend, the same average in the first couple of candles, but much more after that, right? Always see that once the candle opens, the stuff is hardly reached and it's not far away. In this particular case, it was 15 pips. In this one, our stop was about 20. Okay, so as you can see in this example, it's the average of successful 50 pips trade. It's pretty high. It's pretty high. See what happened in this case. Let's review the bad ones, not the good ones. Okay. Okay. Sorry. There. Okay. Well, the fact is that we don't have a clear cut in here, right? In the commodity channel index, we rebounded in the zero line and turned to flat. So that's a trade I won't like to take. Okay. But see that, sorry, I don't know why it's moving so much. Okay. Sorry. This one here, sorry. Okay, so see what happened with the candle. It opened exactly around the moving average. Okay, this is the 15 period one. And the indicator retreated from the zero line. That's warning. That's not a good idea to sell around there. It's better wait and see what happens. Okay, as usual, and as I told you, the signals are better when they come from 200 levels. Okay, in this particular case, in here, okay, this is a good or bad one. Okay, see what happened here. We have the commodity channel index crossing. Okay, in this candle. Okay, but the moving average was not catching the completely the 3-1, the 15 in this candle. Okay, take it another one. Anyway, if I get into the market in buying position around 43.90, in this case it was way too long stop loss under this 43.20 low. Okay, more than the average. Okay, but if you take a look, the pair just never hit it. That's what I placed my stop there, and in fact it gave me the good upside value. Anyway, what I'm trying to show you with this bad example, okay, is that when both conditions are not accomplished at the same time, that's the moment when it's not worth to apply the strategy. Okay, that's generating in here. Understand the behavior of the indicators. Okay, it's not just one or just the other. It's both at the same time, and we did not have any of those conditions in here. Okay, that's the idea of showing us the by example. Anyway, do you have any questions or comments or whatever? Oh, okay, yes. Harley, you got those. Yeah, my home is turning into a zoo lately. Okay, trend, a review of the moving average settings here. Yes, no problem. We are going to take a look again at them. So you can copy whatever you want. Okay, for pound, and always remember it's 30-minute chart. Okay, it's a 3 periods linear weighted applied to close. Okay, 3 periods linear weighted applied to close. Anyway, I believe that at the end is recording the webinar, so we'll have copy of this one, and I will let them there for a second, so it will be easy to review. And the other one is a 15, also linear weighted, applied to typical price. Okay, these are the settings here. For euro, dollar is 3 and 25, simple, applied to close flow. Okay, those are the settings. Okay, another question. You're welcome, Trent. G, pound, the commodity channel index 14. Yes, and yes, you see exactly 50 in euro. Okay, you are not wrong. You are perfect there, G. Okay, in euro, trades are fewer, but usually give a lot of more pips, while in pound, okay, it's just a short-term trading strategy for when markets are volatile like these days. Okay, and will give you little less pips than in euro, but be profitable anyway. Okay. Okay, so no more questions or comments, then we will probably, you're welcome, Linda. Nice to see you here. I didn't see you before, okay? Anyway, okay, yeah, Big is there. I believe that's it for today. As always, my pleasure to be here with you. Hope you had enjoyed it, okay? And if anything, you know where to find me. I'm always around, okay? Thank you. You're welcome. See you soon. Bye bye.